Hi everyone. Today let's talk about the Fed interest rate cut coming tomorrow. Then we'll take a look at the usual charts while markets continue to hover at these record highs. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the Fed meeting is tomorrow and everyone is expecting 25 basis points at a minimum, but are they going to be more aggressive and get that 50 basis points? Beyond that, markets are looking for a 1.25% cut or 125 basis points before the end of the year. Again, that seems aggressive. Markets are getting a little ahead of themselves the same way they were early in the year when we expected cuts long ago, and a lot of them. The Fed said we would get 3 cuts, and then the markets quickly thought we were going to get 6 or 7 cuts, and all of that has been pulled back. And once again, it seems to me that markets are getting a little bit aggressive. And you got people here saying, I hope they cut 50. I think they're going to cut 25, which is basically what I've been saying for a while. I think 25 is coming, and I think markets are going to be disappointed at a minimum in the short term. And I think that could carry through to a more medium-term drawdown. In terms of Fed futures, 63% chance of a 50 basis point cut. Again, that's massive. I just don't think it's going to happen. It is worth noting that inflation pressures have fallen from 3.3 down to 2.5. Unemployment continues to rise from 3.5 to 4.2, which historically is still a very low level. Not enough to pressure the Fed to cut 50 basis points, in my opinion. And then we need to see what happens with the dot plot. You can see markets are looking for 125 basis points worth of cuts in the last 3 meetings, which again seems super aggressive, meaning that at least one of those is going to be 50 basis points. Feels overly aggressive unless you believe the economy is about to weaken significantly, which I do not. I think the economy has been okay. I think it's definitely been softening, but I just don't think there's enough pressure to cause a 50 basis point cut yet. And honestly, if it does happen, I just don't think markets are going to reward that. I think it's going to reset markets into a potentially more bearish move. Of course, anything is possible. Certainly possible that we get 50 basis points and markets think the economy is saved and we rocket to new highs, or this is a triple top and markets are done for the medium term. Moving over to fear and greed, stepped up to a 55 from a 50. Markets continue to show strength at these all-time highs. We did wick a new all-time high, but we closed below it. Strength continuing to hover here. The NYSE is doing quite well. Breadth also hovering in extreme greed, part of why I think markets are generally done, at least in the short term. Put-call ratio has pulled back fairly substantially back to neutral from extreme fear. Volatility continues to trend higher as markets are trending higher. Makes sense as we head into FOMC, but I think it's going to get worse. And then safe haven demand, still fear here, along with junk bond demand, still in extreme fear. Moving over to the economic calendar, retail sales actually came in pretty decent. Retail control in line, retail sales 0.1% versus the negative 0.2 expected. Previous number was also revised up, so the consumer doing a little better than expected. 20-year bond auction 4%, basically flat with the previous. And then of course for tomorrow we get all of that FOMC data, housing starts also in there. Interest rate projections, that dot plot comes out. Current projection here based on this chart says 5.25, so 25 basis points cut. And then for tomorrow, just a little bit of jobs data as always, and then existing home sales plus Fed balance sheet. Moving over to Max Payne, this just shifted a little bit. 545, stock price 563, still well below current price with that Max Payne. So we'll see if it comes down to that 550 area, 555 area. Again, we're looking at bearishness. Put call ratios come down a little bit, 2.8. Maybe that gives you a little bit of room more to the downside. Total options came down a little bit, 3.76 million. So we'll see if that continues to be a factor. Huge call wall at 570, not expecting to get anywhere near there. 565, also a big call wall. So again, between 555 and 560 makes sense, if not all the way down to that 550 area. So right now, Max Payne says a little bit of bearishness. Moving over to the S&Ps here on the daily chart, you can see we did throw a big wick there. The high of day was 56.70, and you can see the high going back to 16 July was 56.69. So we did wick just barely a new all-time high, just short of that trend line here. Momentum's bullish, RSI is basically flat. We did give all of that back, finishing up basically flat, 0.03 to the upside. Again, this is a major zone of resistance. Right now, we're still looking for a triple top, and that thesis is still intact. We're looking to see what happens tomorrow based on the FOMC. Right now, doesn't look super great, but anything is possible. And then looking at it on the shorter time frames here, you can see we wicked that all-time high level, 565.60. 516, pulled back, hit the 55 EMA, threw some wicks there, ended up flat, basically at yesterday's highs. We'll see what happens. We're below the 9, below the 21, so that's a little bit of a bearish break. Still consolidation, still stuck between these levels as we head into this very eventful FOMC, in my opinion. And then looking at the Tasty charts here, the 4-hour on the S&Ps, you can see we're right at that 8 EMA. That's at 562.98. We did wick a big low. We're still holding that level. Current price is 563.09, so just about 10 cents above that level. Momentum, bearish, volume, not doing much of anything. Still in bullish conditions. Still hovering at these highs from that previous consolidation. So waiting to see what happens. The ATRs are still trending higher on the lower band. But you can see just a little bit of a bend to the downside on the upper bands, flattening out there. Usually that's what you see towards the top. You can see here ATR bands grinding higher, upper bands starting to level out, and then you kind of see this consolidation leveling out. And then once they start to roll to the downside, that's when things get a little bit more dangerous. So right now, we're still okay, looking for a potential consolidation, at least in the short term. Moving over to the NASDAQ, basically the same thesis, threw some wick highs, got back above the Friday highs, gave it all back, 0.05 to the upside, still hovering right at the 55 and 21 EMAs on the daily chart here. Momentum basically flat, RSI basically flat. Haven't touched that level yet at 19,726. That's what we were looking for coming off of last week. Thought we might get another push, big wick to that level, which certainly could be tomorrow. Touch that level and then get a reversal off of there, which would be this consistent lower high pattern. And then looking at the shorter time frames here, you can see that consolidation. We're right at this trend line here. We got above it in the pre-market, got below it at the end of the session, just barely above it here after hours. Doesn't look super great. We're right there. Either way, right in the zone, still looking for a breakdown from that level. And you can see the momentum here on that hourly chart definitely looks quite a bit worse. You can see that RSI, big breakdown, big breakup, bottom there, slightly higher low, but now we are rejecting off of that level below the SMA. And right now price has been hovering. If price moves in the direction of that SMA, that's going to be quite bearish. And you can see we are below all the short-term EMAs on the hourly chart. Clear consolidation. Once this breaks here, I think we're going at least to that 200, which is down at 465.18. Moving over to the Tasty charts here on the 4-hour, again, similar to the SPY, you can see this kind of consolidation of ATR bands, upper bands continuing to trend lower here. Lower bands are still trending higher, still looks like consolidation, momentum slightly bearish. Volume was a little better. Again, still flat, still in the same consolidation. You could argue maybe pull back in time, but we're back in the middle of the range. It's a little bit of a bearish indicator for me, especially as this being a high, lower high setup in my opinion. Waiting to see what happens. If we get a break of this ATR trailing stop at 468, then you're going to be back into bearish conditions, but that has not happened yet. Moving over to the Russell and the Dow, the Russell continues to outperform massively here. This is 5 bullish days in a row, huge gaps through these moves as well. Gaps usually get filled eventually, so that's a little bit concerning, but we'll see how it plays. Got to this next trend line there at 221.10. Thought we broke out for a second, ended up giving that back, still holding support at 218.79. Again, another gap up, big doji right to these previous highs. Definitely a little bit concerning to see that pulling back there. Overall, this still looks good though. Low, higher low. High, looking for that higher high, waiting to see what happens right here, super important. And then looking at the Dow, continuing to grind at this trend line. We definitely touched it now at 418.98, way over through that. A new all-time high wick, but then on a closing basis, you can see we were bearish on the day, 0.03 or 12 cents. So a little bit of a rejection off that trend, still a critical zone, waiting to see what happens tomorrow. Moving over to the Mag 7, the Mag 7 actually popped here a little bit, about 0.5%. Tried to get to these previous highs, did throw some wicks and then pulled back slightly. Managed to keep some of those gains. Still in this consolidation, didn't get up to that 273 level, did touch these previous levels. Nothing crazy, but does show a little bit more strength here today, probably off the back of that move on Microsoft. Speaking of Apple and Microsoft, you got Apple managed to stay slightly positive after it was a little bit bearish yesterday and then sold off a little bit more today. Momentum still bearish, RSI still bearish. Remember, Apple still has a ton of buybacks, tons of money in the bank waiting to buy up these shares. So any kind of dip lows I would expect to get bought up. How low? Kind of depends, but right now it is still selling. This looks bearish to me. And then looking at Microsoft, huge day on the day. At one point, it was up over 2% there, touched the level 440.72. That was the critical level. That was the price target. And it makes sense. This is why it's important to have those levels. Touch that level, immediately pulled back. Still have not filled this gap back here to 23 July. At this point, I would expect that gap fill, so that's something else to consider. 440 is still definitely resistance. Momentum is still bullish. RSI is still bullish. So Microsoft still looking pretty decent coming off of this bull flag, but definitely some hesitation at that key level. Moving over to Tesla and NVIDIA, Tesla continuing to find rejection at that 232.57 level. Did have a breakout for a moment, so if you took that trade, hopefully you got out of it on the breakdown. That is a critical level. Based on the way that I trade, I look for the breakout and the continuation. So sometimes you get these kind of fake out breakouts and you do have to eat those occasionally. Fortunately, I didn't take this one. Still being patient here on Tesla as we head into the FOMC. And then looking at NVIDIA, big breakdown here, 1%. It's below 21, it's below VWAP. It's also below that 55 EMA. So seems like we're back below this trend. We called the breakout here above this level. Good push, hit the 21, seems like rejection. And to me, this looks like a little bit of a leading indicator to the downside. Momentum not breaking down quite yet, but I would expect this to push back down to that 106.6 level. Moving over to Amazon and Google. Amazon had a decent day, 1%. Momentum continues to fade. RSI continues to look okay. Still can't get above that 188.61 level. And at this point, we are again at a critical level. Seems like the theme for today. Everything is at very important levels as we head into FOMC. And then similarly here with Alphabet. Alphabet hit our price target, which was the 21 EMA. Had a bottom here, rallied up, hit VWAP, hit the 21. That was at 160.82. And then the high of day was 161.59. Hit my price target there as well to the penny. 161.59 was my level there. So critical zone, again, just like everything else. Don't be fooled. This is still very much a downtrend. I think this is counter trend rally, and you should look for a bigger down move still here on Alphabet. Moving over to staples and discretionary. Staples pulling back pretty decently, about 1%. Big wick high, and that is an island reversal. Gap up, gap down, fall. Momentum bearish, RSI bearish. So this is probably done here, at least in the short term. We'll see how much it falls. 21 EMA still support there at 82.70. If that breaks, trend support down here at 81.44. But momentum, big bearish move there. Not a ton of volume on it quite yet, but we did see big volume on this push up, and now we've seen consolidation. So maybe this was selling volume in here. And then looking at discretionaries, big gap, big wick, 0.5% higher, hit the price target 193.81. So now you're in bearish conditions until you see that clean breakout and push to 197. Critical zone there. Below it, you are bearish. Above it, bullish. Back to that next level. So if this rejects here, 189.39 would be the next level. Moving over to oil and gas and tech. Oil and gas had a great day, 1.79% to the upside. Momentum continues to swing. This was a trade we've been watching, and I did up my position here, so definitely long oil and gas up to that 21 EMA at least at 133.89. My level 135.07. I think there might be a little bit more in it, but we'll see. Right now, this is still a downtrend, so you do have to be cautious with that. But RSI looks clean, volume coming through. This was a very important zone there on oil and gas, going all the way back here to June of 23. Critical zone there. We did go lower in that point, but then it rallied super aggressive. So something to watch. Oil and gas looks strong. And then looking at technology, looks like a topping pattern. Big up move, big sell off, couldn't hold the gains. Momentum flattening, RSI flattening. So again, looks like a lower high in my opinion. Moving over to breadth, 20-day breadth, big wakes up, ended up bearish, so that's not great. Momentum still moving to the bull side, RSI still moving to the bull side. Nothing crazy though, still in the same zone, waiting to see what happens. If it holds the level, we're looking for a push to that next zone at 90, or at least the 86.50 area. If it breaks down, we're probably headed back to the 30s, so critical zone there, 68.14, currently holding that level. And then look at 50-day, big wicks up, makes sense. Some of the pushes we saw today were aggressive. Got back into these zones around that 79.86 area, 80 area. High of day was 79.92, which did eclipse the level. Ended up closing below it, selling off a little bit. Momentum, it's in that zone where you could see kind of a flattening here like this, and then a continuation lower. So that's something to consider. If that ends up happening, obviously that's going to be quite bearish. This looks like a bit of a double top, arguably a lower high here on 50-day. Similarly on 20-day, you got a high, lower high, If it breaks down from here, I think we're going to deeper lows. Moving over to the dollar here on the hourly and the daily, you can see the big move down that we saw yesterday, big move up back today. If we get 50 basis points, I think this is probably going to break down further, but this is a solid base in here. This is 3 times now in the same zone. We found some support, RSI right at the SMA, hourly chart looks good here, back above the short-term EMAs. Got the 200 sitting there as resistance at 101.24, right at my level, 101.25. Again, critical consolidation, triple bottom. If it finds a base here, I think this could find some rallies. Definitely would be interesting. Maybe the dollar was pricing in that 50 basis points, and we end up only getting 25, and then we get this rally on the dollar, which would be bearish for equities. So something to consider. The dollar continues to look quite terrible, but it's found a triple bottom, at least in my opinion. Moving over to bonds, J&K basically flat. Did throw a relative high wick. It was positive on the day, 0.06. Momentum bullish, RSI still bullish, still looking for 97.69. So everything here still looks about the same. But look at TLT, definitely a decent sell-off off of that trend that we had here. We've touched it 4 times, 5 times, somewhere in there. Momentum stepping down. Could see this pull back a little bit. Again, maybe this was pricing in 50 basis points and now we're going to get 25. And then we're going to see a little bit of a pullback here. So TLT, it's actually overthrown my rallies. I was looking for $100. We've gotten way higher than that. Your next level would be 102.5 if this 100 level holds. And finishing up here with the VIX, you can see we have these consistent higher lows, and it seems like we're getting another one here. 2 positive days in a row, momentum stepping to bullish. Looks like the VIX is set to go a little bit higher. We'll see how it plays in tomorrow's session. Obviously, it's going to go higher a little bit with the Fed coming up anyway, but if price starts to roll over, then that VIX is going to push, and I think we're going to see that 20 to 22.5 potentially. Moving over to my accounts, I made a little bit of money on the day. I also added some money, which is what you're seeing there, but around $200 profit. Rolled out here pretty aggressively on the IWM on that up move, out to 219 for 10 days from now. Just being patient on that. I still like the Russell. I still think it's going to go higher. Obviously, we could see volatility tomorrow, but $5 credit on that. Right now, there's only $4 left on it, so we'll see how that plays. Might roll that down and in depending on what we see tomorrow, and then Qs didn't touch this at all. Wanted to continue to stay protected there. Didn't buy into that up move. Thought we were going to get the down move. Sure enough, we did. Ended up basically flat on the day. Got the money here, got the money there, no issues. And then looking at the XOP, like I said, I added to this position, changed it into a covered call from puts, and so far that's in a good position here, $119 profit on the shares. And then I sold the covered call here for $1.63 for Friday's session, which means max profit there is going to be $132.63, so I got just a little bit left. See how it plays. I still think we're going to be okay. Do have to hold that for a couple of days to get all of that profit out, but I like oil on this current move. Let me know down in the comment section what you think is going to happen at the FOMC tomorrow. Is it going to be super volatile? Is it going to be nothing? Is it going to be 50 or 25 basis points? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.